Hi, I'm Jan Smith. I'm co-founder of KoreFusion, and today I want to introduce you to our new videocast, Payment Trends by KoreFusion. KoreFusion's a strategy consulting firm and M&A advisory boutique focused exclusively on payments and fintech, and what we do is international. I'm very proud to say that we've now reached this year 78 countries, and that has been across a trajectory of 11 years. And although we've been working for 11 years in payments, most of us, including myself, have a much longer trajectory and career in payments. I've been working for now close to 30 years, and others have been in the firm anywhere between 10 to 25 years. Today, we're going to talk about Kenya and our work there across a few years in our first videocast, and I hope you enjoy this. To remind you in this podcast that we have three parts. In the first one, we're going to break down the data of the research and analysis that we've done. And then we really get into the details in the breakdown part of this podcast. And at the very end, we offer you our opinion and our insights. So please stay with us until the end. And today we're going to be talking about research and analysis that we've been doing in Kenya. Kenya's been a market that we've been looking at for a few years now. And joining us today are Claudine Wakasa, who is in Nairobi. And it's a joy to work with Claudine always. As I tell Claudine, she's a bright ray of sunlight coming in and always keeping the room very joyful. And Jaime, today you're in Joburg. I think it's actually a stormy day in Joburg, or are you in Cape Town today? I forget.
Well, thank you, Jan, and hello, everyone. I'm Jaime Edelstein. I'm a strategy consultant at KoreFusion. At KoreFusion, I specialize in fintech and financial services. I work on multiple impactful projects across LATAM, Middle East, and particularly in Africa now. I've been doing that for a few years now. My role involves leading market research. I develop also strategy, I find insights, and I deliver actionable recommendations to all of our clients. My favorite part of the job is usually understanding and identifying opportunities in multiple markets. And now I'll pass it on to Claudine.
Perfect. Thank you, Jaime. So my name is Claudine Makasa, and I work with KoreFusion. I'm based out of Nairobi, as Jan mentioned. And my role is really just ensuring that our analysis has that African footprint to it. It is relevant to what's happening here on the ground, being able to tap into the right networks, being able to provide that extra nuance to our analysis and to our findings. I've enjoyed working with KoreFusion, done a bit of work in South Africa, and now we're looking at the Kenyan market with a more critical eye, and really excited about this conversation that we're about to have.
Claudine, what's really exciting is you're on the ground there, so I think it'd be great for you to run us kind of through the lay of the landscape of what is Kenya, particularly the lending market and its size, how it's changed, and a little bit of the dynamics. And also give us a flavor, because you use and see these products in the market all the time. So why don't you walk us down a little bit so our audience can understand the size of the market and the types of players. Just give us a rundown of the ecosystem.
Of course. I mean, Kenya remains a global example of how mobile technology can not only drive financial inclusion as that first step, but it can also transform financial services such as lending and in turn spur economic growth. So while there's been a huge focus on mobile technology since its launch in 2007, and rightly so, there has also been additional significant growth and innovation occurring across the entire financial services sector.
Perhaps our audience isn't maybe so familiar, particularly with the SACCOs. I think maybe many people have heard of M-Pesa and obviously banks, but maybe give us a little bit of the SACCOs and also these informal channels, which I think are very important to keep in mind in terms of cultural affinity, which are the Roscas.
Yeah, Jan, thank you so much. And just to step it back a little bit, you mentioned our lending market is about 22 billion, and that was the estimate for 2023. And that's just for a population of 60 million people, which means every single individual is accessing about $360 per year, which is huge because 3 years ago it was about 35% less. So this growth has been driven largely, of course, by increased demand from customers, and they're looking for more access to lending and loan products. But there's also been an increase in supply. And this is not just from a numbers perspective, but also from a diversification and innovation in offerings perspective. But what has had a huge impact, of course, is this thing around mobile adoption. I mean, we have a minimum age of 10 for one to access a mobile wallet and to be able to use it. And we're seeing that Kenya's financial penetration rate is almost at 90%. So this market is clearly very switched on, and the consumers are clearly very discerning. But of course, there have been challenges, capitalizing on this growth, which has left many customer segments untapped. Now, you talked about the SACCOs and the chamas, which are rotating savings clubs. So if you look at the word chama, it actually comes from a cooperative society. So there's that connection with the cooperative movement, and you find that it kind of stemmed from there. But then also there's an aspect of its social nature, which has developed with time. Chamas were traditionally formed by women, and they were created as a social safety net. So if you had a death in the family, if you had an emergency, then you'd be able to dip into those funds and, be able to deal with whatever crisis has come. But that model has evolved into a more formal structure, and you're seeing it being taken up by more formal institutions like SACCOs, and you have commercial banks as well developing loan products for chamas just to help them better save and realize some interest from their savings. So yes, there's been quite a growth in the lending sector that's been driven from our traditional kind of systems, but that has translated into a market that is fairly diverse in terms of the lending offerings. So as I've mentioned, by 10, you can have a mobile wallet, which by 18 allows you then to access lending from MNOs. And they represent about 3.8 billion of the 22 billion that we mentioned. We similarly see that kind of level of lending coming from commercial banks, about the same rate, close to 4 billion. And then the ROSCAs, which are the chamas as well, at about 4 million. So those three groups capture the majority of the market, but there are also opportunities that we're seeing with fintechs beginning to also carve out a little piece. They're looking at about 1.3 billion in lending in the market. We have this new Hustler Fund, which came online 2 years ago, and that's about 0.3 billion in the lending market. So there's quite a diverse number of actors and lenders present. But I think, one of the things KoreFusion did was research around whether those lending products are actually serving the market well. And I'd love us to explore that a bit going forward.
What I want to talk about, or us to talk about in the second chapter of this video cast, which is breaking it down and beginning to open up maybe what are some of the less known or even sometimes controversial insights that we've been discovering. And to that end, I'm remembering once in Brazil many years ago that we got laughed out of the room because we foresaw that Pix was going to have an enormous effect on debit cards. And there's a bit of schadenfreude of feeling good now that when you get laughed out of the room, we see this 7 years later, and we see a definite churning of the market and moving towards Pix. And I think Kenya has some of those elements as well. And Jaime, you've been close to this in the research that you've been helming, that there's, despite this new offering of credit, we're still finding maybe some personas or some types of even affluent types of persons who are not having enough or maybe the right type of credit. So that's kind of counterintuitive, and I'd like to have you walk us through some of the findings and the analysis of all of this research that we've been doing. So where do you see there's an opportunity for more credit or better forms of payment products, beginning even at the top of the social pyramid and then breaking it down by socioeconomic segment?
Thank you, Jan. Actually, it's quite impressive how the Kenyan market has grown. However, this growth still does not capture the full spectrum of different consumers that there may be in Kenya. To dig a bit deeper, first we can start taking a look into the formal players And starting with the banks. The banks usually are very traditional and right now very focused on the top of the pyramid, very affluent people usually, or very consolidated businesses that recur to banks to have a loan. These banks also are launching what we call fintech spin-offs. These fintech spin-offs are mobile-based applications that allow access to usually low-income people to loan facilities. These mobile loans are easily accessed through the phone and they are dispersed very quickly. And they tend to be in the low spectrum of the ticket size. So that's number one. Then we have the SACCOs. SACCOs are very traditional, and I believe about 3 point something million people are accessing SACCOs right now. SACCOs are competing with banks. So usually it's the formal employees and the government employees, the teachers and the Safaricom themselves, the Safaricom workers themselves who are accessing the SACCOs, looking usually for a large ticket size, looking to cover a deep need or a planned purchase that they have in mind. So with these two players, we're covering a spectrum of large ticket sizes. Then when we look at M-Pesa, as Claudine was mentioning, with really low ticket sizes, these both loans are targeted to people who require just a little bit of money in the short term to cover emergencies or to cover expenses that they have at hand real quick. So this opens up the opportunity, or this reveals actually the opportunity, because some segments are not being looked at currently. So in those segments, we have affluent youths, business in their way to consolidation, urban businesses also, and these types of segments who are looking for mid-ticket sizes, but that are also accessible and based on trust. So in here is where we can find the real opportunity right now.
Thank you, Jaime, for that. So it's really interesting to see how the different players have tried to go after particular segments within society and begin to tailor their offerings to that. For the third part of our video cast, it would be really great, Claudine, for you to give us an opinion of how you see things on the ground. I mean, you're living and seeing this every day, and so I guess it's been interesting for you to kind of see the research and the numbers come out of it and then compare it to the empirical evidence that you're dealing with every day. So how do you think that the banks have catered to the opportunities in front of them, and what is left for them to do?
Yeah, no, it's quite a good question, because we see in the Kenyan market, at least, there's been this historical focus on access to finance and financial inclusion, which has resulted in a specific demographic being consistently targeted. And that's the bottom of the pyramid most of the times. And as Jaime has pointed out, it has led to these segments that are not being given the attention or, seeing the innovation that they need for them to engage. Some of the groups that he's mentioned, particularly the youth and the affluent youth, it's unlikely that they would want a loan that is tied to Fuliza, because they have an understanding of the interest rate on it. They understand what it's for, and they understand that it doesn't serve their purpose in that moment. So they're quite discerning in that sense, and they're looking for someone who's going to meet them where they're at. And that's from the product design and how it serves them. But then the second is the UX, which is how is it available to them? They're very digitally savvy. Is that something that they can get on that platform? Two, most of their consumption is tied to consumer goods. Is it something that allows them to realize some sort of benefit by engaging on this specific platform or with this specific product? So I do see that there are definite gaps in terms of demographics. There are certain groups of people who are struggling with what the market is offering, and it would be interesting to see how new players or even the old players can innovate to meet that demand. So I definitely agree that that's one of them. The other thing is I'm currently on a farm right now.
You're on a farm. You're on a farm. So
I'm
tell us,
currently on a
tell us how you
farm.
think.
And
Okay.
yeah, and it's very interesting to see first how payments work on the farm. It's very high trust in terms of the environment. No one really uses cash anymore. We're all using M-Pesa for every transaction. So it's the question is, if I needed a quick loan, where would I get it? I would not want to use my mobile app because, again, the rates are quite high. So I'll tend to go to my neighbor and ask him for something, or I'd barter something temporarily as we wait and sort out the cash flow issue. But if someone stepped into this space and just understood what that farmer was looking for, designed a product that was specific to them, I think that would go a long way. And when Jaime defined that second demographic of the consolidated businessmen in rural areas, it struck a chord because I'm here now and I can see that there are gaps, there are ways in which this demographic is not being engaged that needs to be done.
Yeah, no, it's a very pragmatic way, right? You make do with what you have, and but Claudine, I mean, you're on the ground and you're talking about living on the farm, and you're seeing, 90% penetration of financial services and products. That's an envious statistic to have. And I think that's something Kenya can be very proud of saying in the space of about 10, 15 years that they've reached that. And yet, I can't think of many other countries where that level of financial service penetration lives alongside a very deep cultural and also a very dichotomous rural versus urban dynamic, in which you were talking a little bit earlier on the farm of, well, we might not have cash right now. We might even not have signal, so we're going to barter. We're going to be pragmatic about it, right? I mean, how do you see this evolving in Kenyan society, this coexistence of technology, financial penetration, but again, cultural and rural urban dynamics? It's a very interesting mix.
Yeah, I mean, and I think that's why the chamas, the roskas will not die anytime soon, and the cooperative movement will not die anytime soon. So we're predominantly an agriculture society, and those structures have remained with us, maybe not physically, but still mentally they're there. So a lot of people have their apprehensions about formal banking from their interactions through their cooperatives or their SACCOs or their chamas. Banks are seen as this stringent structures. They just don't. They're not easy to navigate. You can have a conversation with a banker around why there's a delay to your loan. Now, if you think of how you take a loan in a SACCO, it is the friends or fellow SACCO members who are backing your loan. They're basically saying that if this person doesn't pay, I will pay it. So it becomes, again, that community aspect. And if they default, then they are the ones who take care of that loan or reach out to you and make sure that you pay the loan on time because it'll result in them losing money. But there's also that kind of urbanization that's happening and where people are losing that SACCO movement because it's based on agriculture. But you're seeing it evolve into cities. So for instance, where you go and do your hair, there's a SACCO of hairdressers that now operate there. So they take that model into the city, but they still kind of hold on to some of their past. Now, what's interesting is that banks are now creating products for SACCOs. So they understand that model will be there. It will not go anywhere. And so they're deliberately tapping into those groups and offering better loan terms, just a better system, a more formal system that allows them to gradually move into the banking sector. So you're seeing that kind of dance happening.
And that's interesting. And I think, Jaime, this touches on some things that you saw in the work we've done with fintechs is, as Claudine was saying, the banks are beginning to look into the SACCO opportunity, but we're seeing that there's a role for technology and maybe even just the development of apps, and could be an opportunity for collaboration of bringing together technology, these traditional forms of lending and social dynamics.
Yes, and this is very important, and it also becomes a way for fintechs to continue growing. On the one hand, consumers still want to have this sense of community, sense of belonging, and sense of commitment that they find in SACCOs. However, they want to access the products in a more streamlined way, with a better UX, with more speed and more convenience. So there's this co-opetition model in which fintechs can act as a channel to access new segments, while there is a SACO behind them that is supporting. So in this way, the distinct consumer segments get the best of both worlds. So they can access products in a more streamlined way, but they also keep the sense of commitment that they find in SACOs.
All of this depends also on the availability of a developer community and developer muscle and funding. Funding in terms of budgets from banks, funding from venture capital and private equity into the fintech world, and then the funding of deposits into the SACOs and into the MFIs coming from users converting from cash more and more into digital deposits. Claudine, how do you see the developer community being robust enough, strong enough? Where do you think it might need some help? What's been your exposure there?
One of the things we're hearing, of course, is Kenya is called the Silicon Savannah. And this is because we have quite a strong tech hub here. There's been a lot of innovation that has been spurred by M-Pesa and mobile technology and mobile money, which has kind of provided that fodder for a lot of fintechs to play around with. So that has been a plus. But of course, you also hear a different perspective, which is the presence of mobile technology and especially M-Pesa may have stifled other kinds of innovation within the space, meaning that everyone feels that they have to go through M-Pesa to be successful, given their reach and just how trusted they are as a brand in Kenya. So you're seeing challenges around BaaS players coming into play. You're seeing banks also, not really tapping into different innovations that might be more common in the South African context and preferring to just go through M-Pesa, just given how easy it is and how simple it is. So it's kind of, a mix of both. So you do have a strong developer community, but it could be stronger if possibly there was more competition for M-Pesa.
Where do both of you see the story unfolding? Is this going to be something where M-Pesa sees beyond itself and really lifts the tide for the entire society, given their enormous penetration and their weight? Or is this maybe the beginning of the crumbling of M-Pesa's reach, and where banks come back into the fold and find their voice and their strength again, and so do fintechs, and also, for that matter, SACOs and ROSCAs finding their niche? Where do you two see this story unfolding?
Well, for M-Pesa, first we need to understand where they come from. M-Pesa is a transactional platform, so they've been very good at enabling Kenyans at paying first between themselves and then to businesses and to multiple parties now. And they've been deploying all of the infrastructure they need and all of the products they need in order to capture all of the transactions. However, all of their strategy, it seems, is very focused on continuing enabling these types of transactions. So I believe that there's still room for cooperation with different parties, including banks, including fintechs, even the SACOs, to continue this path of innovation and and the launch of new products. Particularly, I believe that M-Pesa should be considered in this regard as a key channel for the distribution, and then different parties can use this platform to deploy them.
And actually, this makes me think, Jaime, since you've been speaking with banks, both in Kenya and also some of these are regional players, where do you think there's cracks in the armor of the M-Pesa model that banks should focus on? Is this something that maybe focusing on a particular consumer group or a product, like within the work that we've done, where do you see maybe there's the beginning of an opportunity for the banks to have more presence and more dynamic innovation?
From what we have seen, banks are really looking for differentiation. So there's only so much they can continue growing just by focusing on the affluent segment. And in that search of differentiation, they need to start looking down at other segments. However, some of the top banks have been doing that, trying to emulate what M-Pesa is doing with the nano loans or really small amounts. So what we have seen is that there's room in other segments, usually uncharted, that need to start exploring. And by tailoring different products that address this type of need, and we have seen this type of products for other clients as well. And to start taking a little bit more risk, they have the data and they have the infrastructure to do that. They can start also unleashing growth for themselves and start serving new consumer segments.
Right. I know Claudine and you had mentioned, and this struck a chord because Claudine is on the farm. The idea of the rural business user or solopreneur, entrepreneur. We've also touched on youth as an extremely interesting and upcoming segment of society, which probably cuts across all socioeconomic segments that we need to focus on. But is there anything that we need to maybe think now in terms of the urban micro entrepreneur or the consolidated business owner? Who are they most receptive to? What is it that they're looking for? And how should, if you're a bank, a SACO, or even if you're M-Pesa, go about engaging with them and developing products that are relevant to them?
For me, it would be really key for any player in the market to take some time to maybe do some human-centered design around those specific demographics that have been identified in Jaime's work. I mean, there are 5 groups that are looking for good products and simply don't have them available. So take the time, get to know them, get to understand their needs, and it will definitely translate into a worthy business opportunity for you.
And Jaime, where do you think or feel intuitively that there are things to keep in mind, or where to begin this journey if you're any of these players wanting to offer to products to the groups that we've identified?
I believe that the first thing to take in mind is that M-Pesa has not won the battle. They have a very clear path of growth, and different players need to find different paths for continue growing. They need to start looking at these new segments. These segments that we have taken a look into, they are definitely not being, they're not seeing their needs being covered. And so I agree with Claudine. The different players need to start looking at them, getting to know them, and develop new products. And focus a lot on convenience, accessibility, and how these products are going to be put into the market.
Claudine, Jaime, thank you so much for joining us today. This couldn't have been a more enriching conversation. Thank you again very much. To our audience, we love sharing this experience with you, and thank you for being on the other side, and look forward to seeing you in the next episode. Please subscribe to our Videocast whenever you see or listen to us, and we'll meet again in future episodes for more insights. Thank you.